Good morning. Good morning, traders. How are you all doing today? Karibuni sana. Glad to see a lot of familiar names and more people streaming in. Glad that you could all join us this fine Wednesday morning as we're looking for some trading opportunities, or at least what we can potentially look to find for some trades today. So, uh, my name is Mitch Kaniero, a trader with Afriforex. I want to welcome you to another Afriforex daily analysis session. Now, you do know during this session, we as a Forex team, or at least early in the morning, we analyze the markets, we identify trading opportunities we as a Forex team will be looking at taking for the day, and we do share that information with you. As usual, I'm not here alone. I'm here with the Forex team. So we do have John in the back office. So he'll be here to assist in whatever questions or queries you might have. So feel free to ask those questions either in the Q&A section or in the chat box if you're on Zoom. Now, unfortunately, if you're watching on YouTube or any other platform, the comment section wouldn't necessarily be able to answer you live. But if you do want to be able to join us on Zoom, there should be a link right there in the description. So I guess we can jump straight into it. So hope you can all see my screen. So we'll start off as usual with our watch list. Now, when we look at our watch list, this is our watch list for today, Wednesday, the 19th of June, 2024. We are going to be looking for buying opportunities on the Canadian dollar, similar to yesterday, the Swiss franc, similar to yesterday. However, we do have a bit of a change. So you can see yesterday we did have the US dollar and the euro, which was also on the buy side. Now those pairs have moved to the sell side, and the New Zealand dollar and the Australian dollar, which were on the sell side yesterday, have moved to the buy side. So this will be our watch list for today, looking for buying opportunities on the Canadian dollar, the Swiss franc, the New Zealand dollar, as well as the Australian dollar. And we'll be looking for selling opportunities on the British pound, the Japanese yen, the US dollar, as well as the euro. Now, you do know, just because we're saying buy the Swiss franc or buy the Canadian dollar, that doesn't mean you just buy all of them. Ideally, it's always best to mix and match the best ones, the ones which will give you a higher probability. So we'll only mix and match the pairs on the buy side with the pairs on the sell side. At no point in time will we mix pairs that are on the same side together. There, you most likely you'll find the market ranging. So unless you like ranges, then maybe you can potentially look at one of those. But for now, we'll focus on mixing the pairs on the buy side with the pairs on the sell side. So before we focus on today's pairs, we'll have a look at the pairs that we did have yesterday, see what kind of reactions did end up happening, what we could have done, or at least what we did do, what we couldn't have done as well, and see how we can end up improving on our trading moving on. So we'll start off here with the New Zealand dollar against Canadian dollar. Now, in this kind of pair, yesterday, our bias was to look for selling opportunities. Now, remember, we always point out these market opening times, 10, 3, and 4:30. Those are the specific times that we end up actually looking for trading opportunities because the markets are most likely to move at that time. You can see at 10 o'clock what did end up happening. The price did end up giving a pullback. You can see once the price broke, or at least was on its way down here, you can see there was a support and resistance area where the buyers were running, and once it was breached to the downside, you can see it pull back to that area at 10 o'clock, giving us a selling opportunity. You can see the market still did give us another trading opportunity once the price held below, trying to come and target all the way to this particular low. Remember, we did point out, once you're entering conservative entries, you can't necessarily try and target too far. The first problem area that you will face is where the market ended up turning from. So just be careful about that, because you can see this being the buyer's area, at least since the buyers reacted from here, there's a high probability that they could react again. So especially if you're going to enter these conservative entries, do make sure at least by the time the price approaches that particular low, you have done some sort of trade management. As well as take note of the specific times. Remember, 10, 3, and 4:30 are the times that the markets are going to move. So at 10 o'clock, the price was right there, giving us a selling opportunity to come down. However, you can see at 3 o'clock, that's exactly when the price was in a buyer's area during the US market open. And that managed to actually bring the price up quite aggressively higher. And you can see 4:30 where the price was, it had actually breached this area to the upside, confirmed that the price was holding. And you can see during the New York Stock Exchange, the price did manage to continue going up higher. So even though the price nearly approached our main seller's area, and you can see the price attempting to start coming down lower, you can see how the sellers are coming down, not necessarily very strong. And the fact that this pair did end up falling off our watch list. So we'll no longer be looking for any trading opportunities on the New Zealand dollar against the Canadian dollar. Now, moving on to the next pair that we did have the Australian dollar against Canadian dollar. Now, remember, we did say trade this pair, or at least the Australian dollar pairs, with caution, mainly because we did have those interest rate news that did come in earlier in the morning yesterday. But we did still point out that we were still in a seller's market as long as we were holding below the red support resistance area. And you can see at exactly 10 where we were within that seller's area, and it did actually end up giving us a trading opportunity to come down lower. But remember, we always point out, don't try and target all the way to the bottom. Watch out and make sure you're managing your trades within these areas that we highlight, because these are also problem areas where the market could potentially end up reacting from, either to go for a trade in your direction, or if you're already in on the trade, to make sure that you're managing that trade well. So you can see the market managed to come down, giving us a trading opportunity, making sure that we should have managed right there. Did end up attempting again, coming down lower. You can see a similar situation. Around 3 o'clock, we're back within this buyer's area. So if we're looking for sells, sell where they're sellers and buy where they're buyers. So since we're looking for sells and the price is within a buyer's area, and it's there within one of the market opening times, this is most likely to happen. You have a higher probability of the price is actually moving to the opposite side. So the trade only worked out during the London session. Remember, these opportunities that we do share are only valid for one particular session, either possibly two. It's not, we've seen at times when the markets actually continue moving throughout all the sessions, but we're not here to tell you to end up taking a trade and leaving it for a while. Make sure that you're taking note of these specific times, because things do end up changing on a daily basis. That's the reason why we're here every day, looking for trading opportunities, either for the London session or the US session. Sometimes also the Asian session, but that's not necessarily all the time. So this pair, once it did end up breaching this area to the upside, it did end up falling off our watch list. So there was no more selling opportunities for the Australian dollar against the Canadian dollar. Now, moving on to the next currency pair we do have the US dollar against the Japanese yen. In this currency pair yesterday, our bias was to look for buying opportunities. And you can see, unfortunately, this price started moving much, much earlier. You can see this was around 7 o'clock or 7 a.m. East African time. And this is still during the Asian session. And you can remember, at least the fact that we're dealing with the Japanese yen, it's more likely to be active during the Asian session, since that's when the economy is awake. So you can see the move started to come to the upside. By the time the London market was opening, price had just managed to breach this area to the upside. I think if we do go to a smaller time frame to see that specific detail of how exactly the market did, you can see once the market did manage to breach this area to the upside, it did give a small pullback, confirming that the price was actually holding above, and there could have been a potential buying opportunity there, or waiting for a pullback to try and catch that buy. But if you take note, look at the time at 3 o'clock, that's when the price actually started coming to the downside. So things did end up changing. And remember, yesterday we also pointed out that there were a lot of fundamentals for the US market, or at least the US dollar, that was coming out during the US market open. So we did tell you with caution, maybe there could be some changes there. And it seems that's what brought in a lot of US dollar weakness. So unfortunately, this pair is off our watch list for today. So moving on to the next pair we do have, which is the New Zealand dollar against Swiss franc. Now, in this kind of pair yesterday, our bias was to look for selling opportunities. Now, it seems that the Swiss franc pairs really was strong, and we'll end up having a look at all of them as well. But you can see in this situation, at 10 o'clock, price was already back within a bias area. So it was quite risky looking for a selling opportunity there. Then we did want to see if the price could breach to the downside and give us some sort of pullback to hold below. Unfortunately, the Swiss franc pairs were very, very strong, and the New Zealand dollar pairs were quite weak. And you can clearly see it did not necessarily give us much of an opportunity. Just managed to continue going down, no real pullback towards the support and resistance area for us to continue with your sell. Unless you just entered based on a breakout, which could have been a bit risky. But if you were looking at the correlation on all the other pairs, it could have actually ended up working out. And you can see the trade was working out nicely during the London session. At 3 o'clock, we could see that the market started potentially turning, but it was at 4:30 during the New York Stock Exchange where you can see this huge pullback that did end up coming in. At least attempting to come and give that pullback within that area, but the fact that the fundamentals have switched, the New Zealand dollar fundamentals have switched as well. You can see if we're looking for sells, we don't necessarily want to sell with such weak sellers. We want to sell with very strong sellers. So unfortunately, this is a pair that's going to be off our watch list for today. So moving on to the next pair for review, we did have the Australian dollar against the Swiss franc. Similar situation. It seems that the Australian dollar pairs did work out quite nicely during the London session. Because you can see at 10 o'clock exactly where the price was within this seller's area. Remember, we always pointed out, watch out for a probe. And this one gave a perfect trading opportunity. I hope a number of you did manage to take it. Unfortunately, we did not necessarily get any screenshot from you guys just yet, but don't worry, you can be able to send them in to us. Our contact details are there in the chat box. But you can see very nicely where the market attempted to breach to the upside, it actually came back in and was holding below. So you can see on that pullback, the fact that the price came back here, it's around 10:30. That did give a very nice selling opportunity, making sure to manage your trade within the buyer's area. But you can see a similar situation. The trade mainly worked out during the London session, because you can see from 10 o'clock all the way to around 3, that's when the market stopped going to the downside. It started slowing down. And at 4:30, that's when the market started taking off to the upside. So unfortunately for us, this is a pair that's going to be off our watch list for today. You can see both the Australian dollar and the Swiss franc are both on the same side if we end up having a look at it right here. So meaning they're both showing strength. And if they're both pairs on the same side, you can clearly see what is happening right here. You can see the market seems to be in some sort of range, just bouncing between these two levels. Now, the problem with such things is we will end up seeing a number of probes happening. Because remember, they're both fighting to actually go in one particular direction. So right now, it might be the Australian dollar really fighting to go to the upside. But what if a bit of strength comes in for the Swiss franc? You'll see the price coming back in, and it will be a huge probe. So that's the reason why for such pairs that are on the same side, it does fall off our watch list, because we want something that is going to give us a clear direction and has a high probability of moving in that direction. So that's it for the Australian dollar against the Swiss franc. As we move on to the next pair for review that we did have yesterday, we did have the euro against the Japanese yen. On this kind of pair yesterday, our bias was to look for buying opportunities. Similar correlation with other yen pairs around 7 o'clock, which was still during the Asian session. The market still managed to actually go to the upside. It was only after 10 the market managed to show at least that it had breached the upside. We wanted to see a pullback, which did come in, and it did end up giving us a trading opportunity at around 3. As you can see in this situation, the market attempted to break the downside, but it came back up. And remember, we also pointed out, like the other trade, if you're going to end up entering these conservative entries, meaning you're waiting for the price to breach this area to the upside, or this one, you're waiting for prices to breach this area to the upside, and you're waiting for a pullback within that area. Even if you do end up grabbing a trading opportunity, watch out for the high that was made, because if the market is most likely to end up reacting within that area. You can see these sellers did end up reacting, even though it probed, the high was still the same. So unfortunately for us today, this pair didn't necessarily take off as much unless you manage your trade there. You can see the fact that the price pulled back. Look at the buyer's reaction, not necessarily showing much. In fact, the fact that these two pairs are on the same side, you can see we're sort of entering into some sort of range. No big boy is really interested in this pair at the moment. So that's the reason why for today, it is going to be off our watch list. Now, moving on to the next pair for review, we did have the British pound against the US dollar. Now, on this kind of pair yesterday, our bias was to look for selling opportunities. Now, it's a similar situation. Since we're dealing with the British pound here, it's mainly active during the London session. And you can see at 10 o'clock, that's when the price managed to actually come to the downside. You can see this particular support and resistance area when the price was attempting to go up higher. Once it was breached, there was a pullback and the price was there within a very nice seller's area at 10 o'clock, which did give us a small selling opportunity. You can see a similar situation. Once the price managed to break this area to the downside, we did end up getting a pullback, giving us another selling opportunity to try and take the price down lower. But it seems that this low, the low that where the price ended up getting to, seems that's all the price managed to get to. And you can see at the specific time, around 3 o'clock, price was within a buyer's area. And remember, we're dealing also here with the US dollar. The US dollar did end up getting a lot of weakness, and that's the reason why you can see the price breach this area to the upside, even showing confirmation that the price was holding above, attempting to go up higher. But today, this is a pair that's going to be off our watch list. Remember, both the British pound and the US dollar are both on the sell side on our watch list today. So that's the reason why we'll not be focusing on this kind of pair. So moving on to the next last pair for review, we do have the euro against the British pound. Now, similar situation. Yesterday, we're looking for buying opportunities. Unfortunately, the price will not necessarily get all the way till our main buyer's area that we're hoping for. But you can see, price always reacts within their buyer's areas and sellers' areas. So we'll always point out, if you're looking for buyers, buy where they're buyers, sell where they're sellers. So you can see in this situation, this is an area where buyers have reacted from for multiple times, even early in the morning. You can see as the price managed to come down. So at around 10 o'clock during the London market open, it was within an area where the sellers, so we do not want to look for any buying opportunities within an area where the sellers. And you can see the sellers did manage to react, coming down lower. Around 2 o'clock, just before the US market opened, it did bounce off this buyer's area, attempting to go up higher, but you can clearly see how much of a mess it is. And most of you can be able to identify that this market seems to be attempting to range at the moment. So unfortunately, did not necessarily give us much of a trading opportunity yesterday, not necessarily much more of a pullback. This area of interest that we were watching out to see, we were hoping to see if the price managed to break to the upside, if it was actually going to hold above. But you can see in this situation, it just came back in, indicating that it was approved. So unfortunately for us, the euro against the British pound didn't necessarily give us much of a nice opportunity yesterday. And as well as today, it is going to be off our watch list. So that's it for all the pairs for review. So we're going to be focusing on today's pairs right now. So for those who are just joining us, this is our watch list for today. So we'll start off with the Canadian dollar. So we'll mix and match the Canadian dollar with all the pairs on the sell side. Do the same thing with the Swiss franc, mix all the pairs on the same side. Then do the same thing with the New Zealand dollar as well as the Australian dollar before we have a look at some indices as well as some metals, gold and silver. So let's start off here with the British pound against the Canadian dollar. Now, in this currency pair yesterday, our bias here was to look for selling opportunities. It is still the same situation today. So remember, we did point out this particular seller's area where the price could end up reacting from. So around 10 o'clock, you can see where the price was, but within an area where the seller attempted to come down, couldn't necessarily go down much. You can see there was a pullback giving us another selling opportunity. This was just before 3 o'clock. It attempted to come down, managed to get all the way down towards the buyer's area. But you can see, give us multiple opportunities. Even here at 4:30, price was back within a seller's area, attempting to come down. And that's the reason why we point out these areas, because we need you guys to make sure you need to manage your trade within that area. The markets don't necessarily just go straight down. If they're going up, they just go straight up. They will be the higher highs and higher lows, or lower lows and lower highs. So you can't necessarily expect the market to continue with the farthest, especially since we're focusing on a smaller time frame. Focusing on the 15 minutes and the 1 hour time frame, we need to just be able to see what can we do right now to be in and out in something that we can repeat consistently. So today the bias is still going to be looking for selling opportunities, and we pretty much have this exact same areas, because we know as long as we're holding below this red support resistance area, our bias should be to look for selling opportunities. Right now, we've just approached this seller's area, so it'll be very interesting to see how these buyers end up reacting. And remember, in order for you to see this detail, or at least figure out what exactly is happening here for you to be able to look for an entry, you can be able to go down to a smaller time frame, preferably the 3-minute time frame or the 5-minute time frame, something smaller that you can be able to see the detail and you can see the struggle. So the main thing we want to see is the buyer struggle and the sellers showing some strength. If we do end up seeing that, it could be a very nice potential sell, especially since the market seems to be in some sort of range, or at least attempting to range. Be aware if the price breaks this area to the upside and holds above, then we'll still be looking for sell. We'll be watching out for the main sellers area right there at the top. But be aware, there are sellers right there, the sellers right there. So remember, we're always looking for buying with buyers and selling with sellers. The fact that this is an area where sellers have reacted from before, there could be a selling opportunity to take the price down lower. That level doesn't react, we'll look to see at another level where sellers could potentially react for us to look for those selling opportunities. So I hope that's clear on the British pound against the Canadian dollar, looking for those sells as we move on to the next Canadian dollar pair, which is the Canadian dollar against the Japanese yen. Now, in this kind of pair, yesterday our bias was to look for buying opportunities. Similar situation, we did end up struggling around 7 o'clock, because remember the yen pairs all started moving at around 7 during the Asian session, attempting to break the area to the upside, which it did, and price was holding above that particular area at 10. But you can see it did end up grinding quite slowly, attempting to even go up higher. Did not necessarily do much. So we have adjusted the levels today, and we will still be looking for buying opportunities, because you can see we've approached this main seller's area. Now, this seller's area has a high probability, or at least based on our analysis, of being breached to the upside, mainly because you can clearly see the last time price was here, how aggressive did it come down? Very aggressive. The sellers are very interested to sell this. But now, whenever the price got here, what kind of reaction is this? Not much, right? And you can see the next time, how was their reaction? Not much, and it's even looking weaker. right? The first time they were able to get all the way down till here. The next time, only till here. The next time, only till here. Right now, it's only playing within this particular area. We are starting to see the sellers are not necessarily interested in giving a discount at that price. So what's most likely to happen? Possibly a breach to the upside and the price to continue going up high. But most of the times we've seen this, the prices still end up spiking a number of times. So don't necessarily just jump in on a buy because we've just said, remember, wait for a certain criteria, either breach the upside to confirm that the price is holding above, so you can end up looking for a buy there. And even if the price gets to a certain high and you get that pullback and you see the price is actually holding above, you can be able to take that trade, but make sure you manage your trade within the high that it made, at least where the market ended up giving you that pullback. You don't know whether or not those sellers will actually be interested in that again to push the price down lower. But in this situation, most likely, or at least that's the situation that's most likely to happen, but there's still a possibility we could end up getting the price actually giving us a pullback, coming back towards this area of interest before we're able to see a buying opportunity to take the price up higher. So we'll be watching out for buying opportunities on the Canadian dollar against the Japanese yen. We'll be focusing on these three areas. So we have the seller's area right there, the conservative area, have the semi-aggressive area right here in the middle, which would be a very nice place for us to look for a buying opportunity there. And we know as long as we're holding above this red support and resistance area, our bias should be to look for buying opportunities. If the price breaks and holds below this area, this pair will fall off our watch list. We'll no longer be looking for any trading opportunities on the Canadian dollar against the Japanese yen. So I hope that's clear. The Canadian dollar against the yen as we move on to the next Canadian dollar pair, which is the US dollar against Canadian dollar. Now, these are brand new entered on our watch list. Here, we're going to be looking for selling opportunities. You can see it's brand new because yesterday we had the US dollar and the Canadian dollar both on the same side, so we were not looking for any trading opportunities on it. But the fact that the fundamentals have changed for the US dollar, we can now look for nice selling opportunities on this pair. So in this situation, we'll be looking for sells, and we'll have identified three interesting areas where the sells could work out from. Right now, we're back within a buyer's area, so it's not a good place to look for your selling opportunities unless we get the price breaching and holding below for us to look for those sells. Alternatively, hopefully we can end up getting a pullback coming in within this particular area, giving us some sort of probe or price action signal for us to look for a selling opportunity within that location. Now, if we do see the price breaking and holding above this particular area, then there's still a possibility the price can come all the way to this particular extreme. We've seen the red support and resistance area. We do call it the aggressive area because the prices will be going up before we're able to sell, but this one has a higher probability in terms of risk to reward for it to actually end up working out. Because you can compare, look at how aggressive the sellers came in. And the buyers do not necessarily seem very, very interested. So what's most likely to happen, at least you can be able to work out in a specific game plan. If it reaches to the upside or at least comes up, you can look for a selling opportunity here. Watch out for one of the market opening times. So if you find the market here and it's there at 3 o'clock, then you have a high probability of the trade working out from there. So if you're within an area where there are sellers within one of the market opening times, there's a high probability that the market could react in that particular direction. So let's wait to see what ends up happening. But here we'll be waiting to see for the sells. Remember, I did point out like the other trade we just had a look at, or at least the other pair. Look at within this area. The last time price was here, look at that reaction. The next time it came here, look at that reaction. But now what the next time it's come, is this all it can do? It's showing that the buyers might not necessarily be showing much interest within this particular area. And if you see the price breaking to the downside, you can be able to look for selling opportunities on the US dollar against Canadian dollar. So hope that's clear for all of you as we move on to the next last Canadian dollar pair we do have, which is the euro against the Canadian dollar. Brand new entry on our watch list, because remember both the euro and the Canadian dollar were both the same side yesterday. So today we will be looking for selling opportunities on this currency pair. So we can see these are the three areas that we have identified that are areas of interest. So we have this aggressive area right there at the top, semi-conservative area, and the conservative area all the way down here at the bottom. Now you can see the market has been, or at least it was in the potential of going through the upside, but most of you need to realize that the market never, it's an uptrend going up. It doesn't just all of a sudden start going to the downside. There's usually a rollover phase or some transition period where it will start going to the upside like a nice trend, then possibly enter some channel, then you'll find the market ranging, before you do end up finding the price now starting to come down lower. So you'll always find that transition where it will be a bit slow as the market is turning. So that could potentially be what's happening right now. You can see we were going up very strong, attempting to go up, couldn't go higher. We're attempting to go up. So if you realize we were initially on a trending market going to the upside, and right now we seem to be in some sort of range bouncing between these two levels. So since we are going to be looking for sells and the market is ranging, most of you know at least the basics of Forex. If you're looking for a sell in a range, the best place to look for selling opportunities is at the top. So if you do get the price coming back in within this area, this would be the perfect place to look for that sell, making sure to manage your trade right there. But the fact that right now we're within a buyer's area, we would not necessarily advise you to look for the buys. They are quite risky, especially since the flow overall is to the downside. And if the buyers do look as if they're struggling, I mean, this is the first time they went to the upside, the second time, but look at these pushes right now. They don't really seem as if they're much interested, and the price does seem to be going slightly lower. So what's most likely to happen? You might end up jumping on a buy, you find the price actually breaking this area to the downside. So remember, since we're looking for sells, we want to see if we can get the price breaching and holding below, then we should be able to look for a sell, making sure to manage our trade within the bottom area right there. But for now, we'd advise you to be patient, wait for either a breach, or let's see if we can actually end up getting the price coming back a bit higher for us to look for those selling opportunities on the euro against the Canadian dollar. So hope that's clear on the euro against Canadian dollar. So we're done with the Canadian dollar pairs. As you can see, we've mixed and matched them with all the pairs on the sell side. So right now we're going to move on to the Swiss franc pairs and do the exact same thing. So yesterday, the Swiss franc pairs really showed a lot of strength. We can be able to see it right here. So this is the British pound against the Swiss franc. Yesterday, we were looking for selling opportunities. You can see the areas that we had highlighted yesterday. So we had the aggressive area here, the semi-conservative, and the conservative area right here at the bottom. It does seem as if during the London session around 10 o'clock, did get a lot of strength, breaking this area to the downside. There was a slight hold below. Wasn't necessarily within the specific times, but you can see just after 10 o'clock. So as the market did break this area to the downside, which confirmed the fact that the price never just went straight back in and held above this area. The fact that it was just holding within this area, this confirmed that this level had actually been broken, and you could have potentially looked for selling opportunities there. You can see the market did manage to continue going down much lower, and that was mainly during the London session. You can see from 10 all the way down around 3 o'clock, it actually continued. So it was also a bit during the US session. It was during 4:30, during the New York Stock Exchange, that's when the market slowed down, and you can see the slowdown of the sellers happening within that area. So today, the buyers here is going to be looking for selling opportunities on this pair still. We'll be focusing on these three areas. Aggressive area right there. We do have a semi-conservative area. You can see this is a support and resistance area that will reach. So the price is coming in within this location. We want to see. This is a good sign for us. They are coming in a bit aggressive. So we need to make sure that they do end up slowing down. So if we can see some sort of slowdown where the market struggles to even make new highs, we see aggressive sellers coming in, then we could potentially find some nice selling opportunities, especially if it's there within one of the market opening times. Remember, that's 10, 3, and 4:30. You can even see as the market was coming down straight to the downside, it didn't just start going to the upside. You can see it entered some sort of range before the market started going to the upside. So you'll always see that slowdown and the struggle of the other party before you are able to see a nice trading opportunity. So overall, we'll be looking for sells. If this seller's area doesn't work, or at least we don't necessarily see much of a reaction, we'll be hoping to see whether or not the price can come all the way to the main seller's area. But be aware, if you've seen an area where sellers have reacted from before, they could still react from that location again. So we wait to see what ends up happening. If this is not within this location, watch out for this seller's area. You could easily find the market, potentially even coming all the way here, then giving some sort of probe before we're able to see the price coming down low. So watch out for that on the British pound against the Swiss franc. Now, moving on to the next Swiss franc pair, we do have the Swiss franc against the Japanese yen. You can see yesterday, our bias was to look for buying opportunities, and this market really took off. You can see 7 o'clock, like similar with all the other yen pairs. From 7 during the Asian session, they didn't manage to take it to the upside. But you can see from 10, the market did manage to continue going up, hardly giving us much of a pullback. That's mainly at least this is the situation that usually happens. If you find a pair, or at least both the pairs are actually working together, one is pushing while the other one is pulling, then you have a high probability of your trade really taking off. You can see the other pairs, it was quite choppy, but this one, just if you entered any buying opportunity, it was either the Swiss franc pushing it to the upside, and at the same time, it was also the Japanese yen showing a lot of weakness, which also helped push to the upside. And that's the reason why you can see this price has really gone up higher. But today, buyers is still going to be looking for buying opportunities on this. We have approached an area where it does seem to be slowing down. You can see some sort of range appearing here. So a pullback is potentially what's going to be happening right now. And that's exactly what we want. We don't necessarily want to buy at such a high price. We want to see if we can end up getting some sort of deal. So right now, as the sellers are coming in, let's see if we can end up getting some sort of probe or price action signal. Whether or not it's within this first location, let's see what kind of reaction we do end up getting there. And also take note of the time. If it's there within one of the market opening times, then you could end up finding a nice trading opportunity to take it up higher. If you don't see any reaction, it's not there within one of the market opening times, you could easily find the price actually coming all the way down to the main buyer's area, and you could find that buying opportunity coming in there. Because remember, in order for us to buy, we need sellers. You don't necessarily go to a shop. If the shop is not willing to sell and you want to buy, there's no way you can buy. So it's a similar thing even with trading. There's always someone on the other side. So since you want to buy, you need people more people thinking that it's a sell in order for you to get a nice trading opportunity on the Swiss franc against the yen. Or at least that applies to all kinds of prices. So hope that's clear. Now game plan on the Swiss franc against the yen as we're moving on to the next Swiss franc pair, which is the US dollar against Swiss franc. Brand new entry on our watch list because both the Swiss franc and the US dollar were both on the buy side yesterday. So today we'll be looking for selling opportunities since the fundamentals for the US dollar switched. So we do have these three areas of interest. You can see the way the sellers really did come down quite aggressive yesterday. Even though they were not attempted to make a new low, this slowdown indicates that we could potentially end up getting some sort of pullback. So hopefully if we do end up getting the price approaching within this first problem area, bring us some sort of probe price action signal, we definitely can be able to look for a selling opportunity within that area. But if not, when we see the price actually coming in higher, can still come all the way to the main seller's area right there, and it should still be for a selling opportunity. It's only if the price breaks and holds above this particular area, that's when this pair will fall off our watch list. But in terms of the bias for the sell, should still be there. As long as you can see this is the main seller who pushed it down. So if you compare how the seller pushed it down in comparison to what the buyer is doing, and you can see how long it's actually even taking for the buyer to do the exact same thing. You can clearly see the sellers are the ones here who are strong, who are still in control. So the best thing for you to do in terms of higher probability would be to look for selling opportunities, but always look for selling opportunities within a nice location, meaning one of these problem areas, or at least an area where sellers have reacted from before, you have a higher probability of those sells happening again. So hope that's clear. The US dollar against the Swiss franc. As we move on to the next Swiss franc pair, which is the euro against Swiss franc. This kind of pair, brand new entrant on our watch list. Similar situation. We're looking for selling opportunities. But if you take note, right now, we're looking for sales, but we're within a buyer's area. So it's not a good place to look for a selling opportunity just yet. We need one of two things to happen. Either this market will give us some sort of pullback coming back within the seller's area for us to look for sales, or we'll find the price actually breaking this area to the downside. If it does, we'll wait for that pullback. Once we get confirmation the price is holding below, could be within one of the market opening times, we could end up grabbing another selling opportunity to take this price down below. So for now, we just need to be patient, but overall, we do end up seeing a lot of strength coming in on the Swiss franc pairs. And the fact that this pair is looking quite similar to the US dollar against the Swiss franc, you can be able to use correlation. So when you find one pair moving, have a look at the other Swiss franc pairs and try and figure out, is it the Swiss franc, is it the US dollar, or is it the euro pairs that are actually pushing the price down? So hope that is clear on the Swiss franc pairs as we move on to the next currency pairs, which are the New Zealand dollar pairs. So we'll start off here with the British pound against the New Zealand dollar, brand new entry on our watch list. In this situation, our bias here is to look for selling opportunities. So we'll be focusing on these three areas. So aggressive sellers right there. We have a semi-conservative area right here. And we have the conservative area all the way down towards the bottom. Now, if you can see how aggressive the sellers did come in yesterday, quite aggressive. So we do know we want to end up looking for selling opportunities. Compare that with how the buyers were giving us a pullback. The sellers definitely look stronger. Right now, as the price is coming up, maybe most people in this situation were still thinking sells. But right now, the fact that the price has reached its air to the upside, guaranteed a number of people's minds are actually starting to switch, and they're possibly going to start looking for buying opportunities on these kinds of things. Remember, in order for us to sell, we need buyers. So maybe this is the incitement that we need. But for us, we'll still be looking for selling opportunities as long as we're holding below this red support and distance area, because we are fully aware the sellers are still strong. So we'll be waiting to see. We can end up getting the price coming all the way back within this area, giving us some sort of probe or price action signal. We definitely can be able to look for selling opportunities. Even though you try and target all the way down at the bottom, make sure you're managing your trades within these fast problem areas. Now, alternatively, what could end up happening, you could easily find this price actually coming down lower. You can see this level has not yet been reached. These are the things that we keep on talking about. Right now, yes, the price is all the way up here. But in order for us to confirm that that level has been broken, we need the price to come back in and show us confirmation that the price is holding above. That would confirm that the price is actually, or at least this level has actually been broken. What's most likely to happen, or what potentially could happen right now, as everyone is thinking that it's a buy, you could easily find the price just coming back in, holding below, giving us a confirmation that that was just a probe, and that could actually give us a very nice selling opportunity to actually take the price down low. So we'll watch out for that. But overall, bias here on the British pound against the New Zealand dollar is still going to be looking for selling opportunities. So moving on to the next currency pair we do have the New Zealand dollar against the Japanese yen, brand new entry in our watch list. Now, in this currency pair, our bias here is to look for buying opportunities. This wasn't on our watch list yesterday because both the New Zealand dollar and the Japanese yen were both on the same side. But today, since biases have switched on one of them, we'll be looking for buying opportunities on this currency pair. So we'll be focusing on these three areas. You can see the way the price managed to break this area to the upside. Compare how the sellers are coming down quite slowly. We want to see if we can end up getting the sellers slowing down and seeing what kind of reaction will we have here. If we don't see any reaction here, then chances are we'll wait to see how the price ends up approaching or coming back towards the main buyers area before we're able to look for buying opportunities. But even though we have these locations, I know we end up just drawing 3 locations, but there are usually a number of areas that could end up coming into, or at least coming into effect. You can see there's an area right here. There's also an area of resistance and support. So even though we're looking for the buying opportunities and hoping we can get the buy as low as possible, also watch out for such locations. It will not be surprising if we do see the price coming in lower, incites very many people to look for sell, then you see some sort of reaction within this location to take the price up high. So just watch out for that. But overall, this one on the bias is definitely to look for those buying opportunities on the New Zealand dollar against the Japanese yen. So hope that's clear on the New Zealand dollar against the yen. As we move on to the next currency pair we do have. Now here we have the New Zealand dollar against the US dollar. Now, today we are going to be looking for buying opportunities. However, yesterday we did have this kind of pair and we were looking for sells. So the fact that we're looking for sells, we did point out at 10 o'clock, can clearly see the price actually ended up reacting, coming down quite aggressive. Wanted to see a pullback where it managed to give us some sort of small pullback and it attempted to try and come down lower. But remember, I always point out, watch out for that particular low. If we've broken that level and there was a pullback, these guys could still potentially give issues. And you can see also note for the specific time. So for example, if you're in a trade on during the London session, don't just hold on to it even when the US market is opening. Make sure you've done some sort of trade management, move either your stop losses to break even or close some of your position. So just in case the market does end up reacting the opposite direction, you've still come out with money. If it continues going in your direction, you've at least made yourself safe and still given the market an opportunity to actually go in your particular direction. But you can see from 3 o'clock, and remember the US fundamentals were there at 3, it did end up changing the bias, and you can see the price started going high. So today we've adjusted the level slightly, but we will still, or at least today, we will be looking for buying opportunities on this kind of pair. So we'll be focusing on these 3 areas. So we have a conservative area right here at the top. You can see the sellers did end up reacting, but how are they reacting? Quite slow, especially in comparison to the buyers. So for us, since we do want to buy, we'll be hoping to see if we can end up getting a pullback, either approaching this first problem area, or there's a potential problem area all the way down to the bottom right here. So we'll be very interested to see how these sellers come in. Hopefully, we'll be trying to get all the way down at the bottom. But as long as price is holding above this area, we should be looking for buying opportunities. But as well, we want to end up getting a very nice risk to reward ratio. And that's the reason why we're trying to get the price as low as possible to end up trying to take the price up high. Remember the concept, most people know, buy low and sell high, but they don't necessarily try and apply that on the charts. You need to end up looking for that discount in order for you to take that trading opportunity to the upside. So hope that's clear on the New Zealand dollar against the US dollar. We move on to the next currency that we do have, which is the euro against the New Zealand dollar. Similar situation with the New Zealand dollar against the US dollar. We did have this currency pair yesterday. However, it was for a buy. Both the euro and the New Zealand dollar have switched sides. Similar situation with the New Zealand dollar and the US dollar. So yesterday, overall, our bias was initially to look for buying opportunities. And you can see a similar situation at 10 o'clock. The price attempted to go to the upside, did end up getting a small hold. The upside attempting to go up higher. It could not really go up as much because at 3 o'clock, we were at the extreme area. And you can see the price managed to come down. And on the pullback, confirming that the price is actually holding below, you can see the time that was at exactly 4:30. So if you were looking for selling opportunities there, we can see the sellers really did come in. And these are the kind of price action signals we look for. And we also tell you, just watch out for the times. Because if you take or at least back test, have a look at the market's opening times, you'll always see some sort of movement. Either look at Asian session, look at the London session, look at the US session as well. You'll be able to see that movements really start happening within those specific times. So that's the reason why we always encourage, make sure you're watching out for the market, or at least you're in on the charts at that time, either managing your trade or looking for a trading opportunity there. But today, since the bias for this pair has changed, we will be looking for selling opportunities on this. So we will have these three areas. We have adjusted them slightly yesterday, comparison to yesterday. So right now we can see the sellers really did come in. The buyers not pushing up as aggressive. They're attempting to come down, but there's a potential, or at least a possibility, that this price has just broken this area to the upside, and we could find the market still coming up higher. The hope would be if we can end up trying to grab a selling opportunity here. So I think a selling opportunity, your stop loss will be much tighter. So even by the time the price gets to this first problem area, you're at least in on a 1:2. If it manages to continue going down, it could be then for a 1:4 or even potentially 1:5. But for now, we'll wait to see what ends up happening, what kind of slowdown, and we'll also be interested to look at correlation for all the New Zealand dollar pairs to see how exactly they're moving. So hope that's clear. The euro against the New Zealand dollar. As we move on to the next currency pair, we do have the British pound against the Australian dollar. In this currency pair, our bias here is to look for selling opportunities. The brand new entrant in our watch list, but we will be looking for very nice sells based on these three areas. So we have the aggressive area right there at the top, the semi-conservative area, and the conservative area right here at the bottom. So it's clearly an area where buyers have reacted from before. You can see them attempting to give a pullback, which is what we want. Want to see if we can end up getting a potential pullback within this particular area, some sort of slowdown, probe, or price action signal for us to look for selling opportunities to take the price down lower. If it doesn't necessarily work within this particular area, we could end up seeing the price reacting all the way from the main seller's area at the top. So we'll just watch out for that. But overall, our bias here is to look for sales. Let's wait to see if we can end up getting that pullback coming in. Now, moving on to the next currency pair we do have the Australian dollar against the Japanese yen. Similar situation, brand new entry on our watch list. The Australian dollar does seem to be showing strength, and the Japanese yen showing a lot of weakness. But you can clearly see where we are. We're within an area where the sellers are. Since we're looking for buys, that's not a good place to look for buying opportunities unless we do end up getting the price breaking to the upside and actually holding above. But you can see even right now what is happening. It seems to be a probe that's actually coming into effect where the market has attempted to go up, but it's come back in, meaning this level is still holding, which is a good sign for us because remember, we always want to try and see if we can get a buying opportunity as low as possible. So even if we manage to grab this buying opportunity within this area here, we should be able to manage our trade within this location and still come out with some good profit. You're looking for a buy all the way at the top there. You don't necessarily know how far the market is going to go. So it's not necessarily a guarantee at that time. So hope that's clear. At least this one is pretty straightforward. Let's wait for a pullback either within this area or within the main seller's area right there at the bottom for us to look for buying opportunities on the Australian dollar against the Japanese yen. Now, moving on to the next currency pair we do have the Australian dollar against the US dollar. Similar situation, we did have this currency pair yesterday, but yesterday we were looking for selling opportunities. You can see the time the market attempted to come down, 10 o'clock, tried to come down, showing us that it was holding below and attempted to come down a bit lower. But unfortunately, you can see at 3 o'clock, we're dealing with all the US dollar pairs. If you have a look at all the US dollar pairs at 3 o'clock, you will see a lot of weakness coming in. And you can see this price managed to continue going up. We did have the red support and resistance area here. Remember, I did confirm once it reaches and falls above, this pair does fall off our watch list. In terms of us looking for the sell, it's no longer valid. And we can see this price actually continue going up higher once it confirmed that the price actually held above this location. But today, since we have seen that the Australian dollar and the US dollar fundamentals have switched, we will be looking for buying opportunities based on these three areas. So we have the or at least the conservative area all the way at the top. And it's also an area where sellers could end up reacting from. So since we're looking for buyers, we don't necessarily want to jump in and buy it up here unless we do get a breach to the upside and the price holding above for us to look for those buying opportunities. Alternatively, let's wait to see if we can end up getting the price giving us some sort of pullback. This would be a much better location to actually take this buying opportunity to the upside. But for now, let's be patient and wait to see if it's actually a hold above or if this is just a probe similar situation as we've seen with the Australian dollar against the Japanese yen. Now, hope that's clear as we move on to the last currency pair we do have, which is the euro against the Australian dollar. Now, in this currency pair yesterday, our bias was to look for buying opportunities, but the bias seemed to only work during the London session. You can see the market did give us a pullback. And remember yesterday during the session, I remember looking at this pair, and at 10 o'clock, we were within this bias area. They point out, since we're still within a bias area, the bias should still be to look for those buying opportunities. And you can see the price managed to actually go to the upside. You should have managed your trade within this particular location. Where you can see the sellers did end up reacting. The buyers attempted, could not go higher. You can see the price was within an area where the sellers at 3 o'clock. And after that, you can see the price really went to the downside, breaching down low at 4:30. That's when the market got the strength to actually break this area to the downside and confirmed by holding below. So at that point in time, it really did fall off our watch list. However, today, buyers, since both the fundamentals of these pairs have switched, is going to be looking for selling opportunities. So we have the main sellers right there at the top. So as long as we're holding below that area, our buyers should be to look for selling opportunities. But you can see right now, we're within an area where the buyers at the price is attempting to break this area to the downside. If that's the case, let's wait to see at what point they will turn. So if it turns and you end up getting the pullback and the price actually falls below, you can be able to look for selling opportunities there, but make sure you do some sort of trade management at the place where the market turns. We've seen multiple examples of that where you could easily find the price coming down lower. You find this price there during the US market open, and you could find the market actually going to the upside. So just watch out for that. Make sure that you actually manage your trade within the proper locations. So that is it for all the currency pairs. As you can see, we've mixed and matched all the pairs on the buy side with the pairs on the sell side. So right now we're going to have a quick look at gold, silver, and the indices, so at least the US 30 and the NAS 100. So we'll start off with the NAS 100. Now, in this currency pair, yesterday, our bias was to look for buying opportunities. Now, it wasn't really much of a movement on this pair because you can see it did seem to just be bouncing between these two levels into some sort of range. So we wanted to see if it could end up getting more of a pullback. Unfortunately, it could not get all the way there. This is around 3 o'clock. Price is within a seller's area. We don't want to buy within an area where there are sellers. You can see the sellers did end up reacting. We had a better opportunity to look for buying opportunities here, but it seemed to have been quite choppy. So we will pretty much have the exact same location that we did have yesterday, but the bias is still the same as well. Want to see if we can end up actually getting the price breaching this area to the upside. And the reason why we're still keeping the same location is because, one, as the price came down lower within this seller's area, these buyers are attempting, or in fact, they came down within this area, they attempted to go up, they could not make a new high, meaning there's a possibility we need a better price than this. So it attempted again, coming down a bit better, but right now as it's struggling, those buyers do not necessarily look very strong. The main thing we'd want to see in this situation is either the sellers don't show any interest and it just ranges within here. And if that's the case, we'll find the market actually breaching, holding to the upside, giving us a buying opportunity. Alternatively, if this price is not good enough, we might actually see the market actually still coming down lower, giving us an opportunity within here before taking the price up higher. Remember, right now, everyone is thinking it's a buy. There are not necessarily many people actually looking to sell. So if there are not many people willing to sell, there's no real opportunity for you to buy. So, but then if the price comes down lower and incites So by the time the price comes below this blue line, many people will now switch sides and they will actually start looking for selling opportunities. And that could be the incitement that we need to actually take the price up higher. So hope that's clear on the the NAS 100 as we move on to the US 30 with the Dow Jones. So in the Dow Jones, yesterday our bias here is to look for selling opportunities. Still is the same situation today. So at 3 o'clock, nothing much happened. This seems similar to the NAS 100, where there's not really much activity. Sometimes you do end up finding this where the big boys are not really interested. There's hardly any buyers or any sellers coming in. You can see there was quite equilibrium within this area. But here, buyers is going to be looking for selling opportunities as long as we're holding below the red support resistance area. If the price breaches the upside and goes above, we can actually start looking for buying opportunities. One of the main reasons is because you can see the way the sellers came in, they did react quite aggressive. And we were happy to see that. But then right now, as they come back here, look at this sort of reaction. The sellers are starting to lose interest and they could end up finding the price breaching and holding above. We do see that, then chances are we could end up looking for the buy. But the fact that within a seller's area could end up jumping in on a selling opportunity, but we need to at least see some sign of big boy sellers. Or if you want to be a bit more conservative, you can wait for a breach to the downside. You can see this is an area where the buyers have been holding. Remember, a similar situation with the NAS 100. If these buyers are not good enough to take the price up high, or at least that price is not good enough, we maybe need a better price. Meaning there's a possibility the price can still come down lower. So if you can wait for that pullback, you can be able to look for that selling opportunity. That one will give you less issues in comparison to looking for a sell here when there's no confirmation that the big boy sellers are actually interested in this pair. So if it does break to the upside, we can actually switch to the buy side. But if it remains below this area, our buyers will still be looking for selling opportunities. So these will be the three areas we'll be focusing on. We have adjusted the level slightly, but also take note of this particular area. It's an area where buyers have reacted from before. They could potentially react from there again. So I hope that's clear on the Dow Jones. As we move on to silver, then we'll jump into gold, the last time pair. So we have adjusted the levels as well slightly. Now it seems that silver seems to be on some sort of range, bouncing between these two levels. So if the market is ranging, the best place to look for the sells is clearly at the top of the range, making sure to manage your trade at the bottom of the range. So we'll be watching out for these three areas. The aggressive sellers area right there. So as long as we're holding below that area, we should be looking for selling opportunities. If that level is breached to the upside, then ideally we will actually be able to look for buying opportunities. So if the bias, or at least the price breaks to the upside and holds above, we can look for those buys. But as long as we're holding below this area and we're ranging, we should be looking for selling opportunities on silver. So pretty clear cut, the market ranging, sells at the top, making sure you manage your trades at the bottom, but also since there seems to be a problem here right here in the middle, that's also some sort of location where you should do some sort of trade management. Not necessarily entering the trade within that location, but doing some trade management within that. So last but not least, we do have gold. Similar situation, we have adjusted the levels slightly as well, because the levels were a bit quite wide, or at least a bit wider, and it seems like those were the H1 levels. So in order to give guys more aspects of what they can do today, we'll be focusing, or at least squeezing it a bit, focus on the exact 15-minute level. And especially since gold has been moving quite a bit, these are very many pips, I think around 200 pips in this big range. So we'll still be able to get some nice trading opportunities, even within focusing on these smaller levels. So overall, bias here is going to be looking for selling opportunities. We watched out for this main sellers area here. We do seem to be in some sort of range, bouncing between these two levels. The fact that within a seller's area, we could potentially see that selling opportunity coming in, but you need to be careful, mainly because the last time price was here, you can see how they reacted. Right now, this could be the slowdown of the buyer, but we've not seen any aggressive sellers coming just yet. So we don't know whether or not the market will end up reacting within here, or if the sellers are actually interested. So we could easily find that the price breaks to the upside and holds above, then will be actually be able to look for buying opportunities. Remember, the metals and the indices are all technical. So if the prices break above or below the red support and resistance areas, directions do change in terms of our bias of what we're looking for, whether or not it's a buy or whether or not it's a sell. So I hope that is clear. That's it for all the kinds of pairs, including gold and silver. So this is our watch list for today. Can be able to take a screenshot of this, but the recording will be available on YouTube as well. So do make sure if you are watching it there, to give a like and a subscribe for us, since it really does help us out. Now, fundamentals today, there's not really much. You can see there was a lot of fundamentals during the Asian session. That's why we have a big change of the New Zealand dollar, the yen pairs, even the British pound pairs. There were some fundamentals that were coming out during the Frankfurt market open. But we only have some European central bank monetary policy meetings, which is not necessarily going to make any effect. We could end up seeing, yes, some effect, but it's based on what people are saying, not actual data. Similar situation with the Swiss franc. They do have some monetary policy assessment, but it seems that today, it being a holiday in the US, don't necessarily expect too much volatility during the US. They could still be. It's not saying that there isn't, but usually when there's a holiday and no fundamentals, there's not necessarily that much volatility or as much as if there was. So just take note of that. But at least tomorrow, we should see a lot more fundamentals coming out. So we'll end up seeing a lot more movements as well on the markets. So I guess that is it from me and from us. Let me see if I can answer just a few questions before we call it a day. So I'm seeing Esther Kabiru is saying, good morning, Mitch and team. Good morning, Esther. Glad that you could join us today. I'm seeing Timothy Ngure is saying, good morning, Afriforex team. And what time do we have the London Open in New York Open? So it is at, well, I'm talking about now here, East African time. So 10 in the morning, which is just now, 3 minutes ago, the London market opened. The New York market opens at 3 o'clock, which is 8 a.m. in New York. But remember, there's also the stock exchange that opens, and that also brings in volatility, which happens at 9:30 a.m. there. So the market opens at 8. An hour and a half after that, they open the stock exchange. So if it's 3 o'clock here at 4:30, that's when the New York Stock Exchange opens, and you could also find volatility there. So that's the reason why we point out those times. So Robert Miano is saying, happy to have you guys back. Taught me how to trade consistently and profitably. Very good. I'm glad to see here that, Robert. I'm glad that you could join us as well. Machine, you're saying, good morning, Mitch. Are there a correlation between the NAS 100 and the US 30? Yes, there is, mainly, but not direct correlation. Remember what the US 30 is. The US 30 is the top 30 companies in the States that have been put together, right? So these top 30 will have an effect, and these same top 30 are definitely in the top 100. So the NAS 100 is the top 100 companies. So you have 30 of those companies that are in the top 100 as being the US 30. So the other 70 or so is what ends up affecting, or at least having the difference. So they are correlated to some extent, where you'll find if some are moving up, they'll all move up together some of the times. But that doesn't necessarily mean that just because NAS 100 is going up, you should just start buying the Dow Jones. You need to actually end up looking to see, but they do have some similar correlation. So I hope that's understood for you, Machine. And Steve Canams is saying, hello, Afriforex. Could you touch on gold briefly? Thank you. I think you had asked that earlier, but there's nothing much to write here on gold, to be honest. We are within a range. We do want to end up looking for selling opportunities as long as we're holding below the red SMA. We do get the price breaking and holding above, then we can end up actually looking for buying opportunities. But for right now, the way the sellers are reacting, they don't necessarily seem as if they're reacting very, very aggressive. And that's the reason why I keep pointing out that there could be a potential breach through the upside, and we could end up switching our bias to start looking for buying opportunities. But for now, we'll just have to wait and see. Remember, we mainly react to how the market is. We need to see what the market is telling us, and we make a decision based on that. We don't just want to assume. And that's the reason why we give see different situations that could happen, what potentially could happen. That's a big thing with trading. It's not saying the price is going to go up, the price is going to go down. You have to look and say, okay, if the price is going to go up, what would you do? Have a scenario of that. Okay, but now if it does the opposite, what are you going to do then? If you have a plan as well, nothing will come at you as a surprise, right? You'll actually know, oh, when this is happening, I need to do this, because you have said, or at least you have a game plan of what would and could happen. But don't necessarily just have one side of it and saying, yes, it's going to go up. And you're only thinking about what you're going to do when it goes up. So when it starts coming down, that's when panic starts coming in. You don't know what to do. You either close the trade or you do what, and you end up realizing afterwards you made a mistake. Once you close the trade, you're like, why did I close it? That feeling happens because there was no game plan initially there. So as long as you make sure you're focused on that, you should be okay and figure out, yes, it could end up coming down for a sell. If it does, what would you do? If it could break to the upside, if it does, what would you do? So at least there you're constantly ready that nothing will be a surprise in the market because you are already expected it. Right? So I hope that's clear for you, Steve. And Martin Sigo saying, what are these yellow lines representing? How come you're drawing them? And how do you come about drawing them? And yes, we mainly focus on these levels. We have done a lot of analysis. I wish you would watch our inauguration, our first webinar that we did. Went through a whole section where we were explaining all the aspects that we teach within this course and the reason why there's a red supporting systems area, what the yellow lines mean, when you should end up exiting a trade, when to hold on, how to use this watch list, how we come up with this watch list. We did end up going through that on our, you should be able to find that on our Monday webinar. You should find that on our YouTube channel, on Afriforex. So you should be able to see that there because we do end up going through a lot, but it's just basically major support and resistance areas that we have been able to identify. But it's not just focused on this, we're focused on fundamentals and everything. Yes, Martin, yes, it's on YouTube. So you can search Afriforex on YouTube and you should be able to find it. Right? So I hope that's clear. And I'm seeing Esther Kabiru, I guess this will be the last question you're asking. Please, how can you access the masterclass content course? I'm a previous student, just want to review. You should be able to. You just use your username and password since you're already a student. You should be able to get access. The masterclass is still available. Remember, we're actually giving a very huge discount right now so that we can be able to try and make sure that more people will be able to join our program. So we're going to be doing a sort of mentorship program very soon. We'll be giving you more details, and that should help you guys a lot. But one of the prerequisites is the masterclass. So we want you guys to be at least on the same level, have a good foundation before we're able to move on forward. Right? So hope that is clear. So I guess this last question, I'm saying, Eric, you're asking, hi, how can we consider the sell entry for GBP card now? There are certain things that you need to know. One, if people are like, let's ask this, in traffic, if cars are coming quickly, are you going to cross? You won't. You'll slow down. Even if it's a green light and you see a car coming quickly, you won't necessarily just go. It's a similar situation. Just because we have given you the green light and said, hey, we should be looking to sell, look at how strong these buyers are. Would you really be interested in selling in the face of such strong sellers? Strong buyers. It would not necessarily make sense. That's why we always say, wait for the slowdown. If this is not within an area, yes, we're back within an area where sellers could react, but we want to see what kind of reaction, right? We want to see, and remember, the markets don't necessarily just flip sides. If the price was going down and you wanted to buy, even if you saw this, if you bought up here, you can see how the market was coming down all the way back within the buyer's area, and then the price started going up. Remember, we always talk about buy with buyers, sell with sellers, but at the same time, wait for a slowdown. Or you can be able to join the masterclass course because we do end up giving a lot of detail on entry points, how to look for entries and what you should actually be considering, and you'd be able to answer for yourself whether or not you should be looking for a sell now. But I would advise not to necessarily just jump in the face of such strong buyers. Metrine, you're saying, yeah, I'm among the upcoming cohort, glad to hear it. And Anike, hi mate, I've just logged in. Do you think there will be any activity during US opening time given today is a holiday? They could still be. It doesn't necessarily mean that other economies are fully closed, but it's just the fact that it has a high probability of the volatility being low, right? That's maybe why there was a lot of US dollar news yesterday, right? But it doesn't necessarily mean that there won't be trading opportunities. It's just it has a high probability from based on the past that might not necessarily move as much, right? So I hope that's clear for everyone. Okay, Metrine. So I want to thank you guys so much. We do need to end up jumping onto the charts. We also need to end up looking for some nice trading opportunities during the London market open. So I want to thank you guys so much again for joining me today. Really do appreciate it. If you did end up liking this video, make sure you share it. In fact, inform people. At least there are many traders who definitely would find this information valuable. And do make sure if you're watching it on YouTube or at least want to see the recording, they will always be there. If there's something you need or at least you missed, you should be able to find it there. So just make sure also to drop a like and subscribe as well. So that's it from me today. I hope you guys enjoyed. I hope you guys have an amazing trading day. God bless. Cheers, guys, and bye for now.